Welcome, everyone, and thank you so much for joining us. Today, what we're going to do is we're going to explore one of the most unique financing options available for our veteran borrowers. That is the VA Renovation Program. At MLB Wholesale, our mission is extremely simple. It's just making lives better. And what that means is giving our partners different solutions that can help more families purchase a home, improve the homes that they already own, and create opportunities that traditional financing just often can't. Many veterans overlook homes because they need additional repairs or additional items added to the home. Today, what we're going to show you is how these types of properties can become opportunities instead of being obstacles. By the end of today's session, you're going to understand when to use the program, who qualifies for the program, and at the end of the day, how to confidently move forward and structure this program, the VA renovation. But first, let's jump into things and actually talk about what is a VA renovation loan. The VA renovation loan combines a purchase or a refinance of a home together with those renovation costs into one single loan at one closing. So instead of asking borrowers to secure financing after the loan has already closed, everything is just built into one mortgage. This is extremely valuable to many veterans simply because sometimes they don't have that additional cash available after they've gone ahead and purchased a home to add repairs. Important things to reminder here. Purchase transactions are perfectly eligible. Cash out refinance option is available only if the proceeds go towards the repairs only. No additional cash out is permitted beyond the renovation cost. The improvement must become part of the real property and it must be attached to the actual structure itself. This program cannot be used to completely demolish and rebuild a home from scratch. The main goal here is to improve an existing property, not new construction. But now that we kind of have the basics of what a VA renovation loan is, why would someone want to use this type of program in order to move forward to those next steps? In today's housing market, there's tremendous opportunities for renovation financing. Because that inventory is continuously limited, many of those affordable homes just need additional repairs, a little bit of updating to happen. So instead of competing over those homes that have already been fully renovated, borrowers can purchase a brand new home that needs that work and immediately build up the equity of the home. The program is also ideal for those properties that have deferred maintenance, accessibility improvements, general cosmetic updates, and those growing families who want to stay in the home that they love, but maybe just needs a little bit of extra love and attention and work done to the home to make it much more comfortable to live in, which goes hand in hand with also with veterans who want to personalize their home, whether that be a purchase or a refinance. Rather than walking away from a property just because it needs a little bit of extra repairs or items, a borrower can then finance the improvements from the very beginning. It's just another great example of how making lives better is by opening doors instead of closing them. Some of the benefits of the VA renovation, some of these we've already covered so far, but taking a look at why the program itself stands out. The borrower may finance both the purchase price and the renovation cost with no down payment at all for those veterans that have a full COE. If they can get 100% financing through their certificate of eligibility, they can move forward with that, a powerful tool that's only available under the VA renovation. Additional benefits include no monthly mortgage insurance, the ability for a potential higher after improved home value. It is all being done through a traditional government backed financing. The ability to meet VA minimum property requirements can be done through the renovation work. Instead of spending thousands and thousands of dollars post closing, the borrowers can just finance those improvements over the life of the loan term. That creates better affordability while at the same time helping out those veterans move into a safer, much more functional type of home. From an eligible borrower standpoint, looking at those veterans, those eligibility guidelines, MLB Wholesale is going to be following your traditional VA handbook when it comes to the approach here. So, from a FICO standpoint, it is a 600 minimum FICO on the VA renovation program specifically. We follow your standard VA, DTI, and LTV requirements. No overlays or restrictions on that from an MLB side. We're going to follow your handbooks on the DTI and LTV. Cash out refinances must satisfy the VA net tangible benefit requirements in order for us to proceed. And remember, cash out can never be provided to the borrower on a renovation loan. The funds can only go towards the renovation costs itself. Whenever you're unsure about eligibility, remember you can always reach out to our client services team with any types of questions. You can reach out to our scenario desk to help review any types of scenarios before you move forward and fully submit that loan to our team. The types of properties that are eligible under the VA renovation program include one unit owner occupied primary residences. So keep in mind it is limited to one unit only on all VA renovation programs, and it must be an owner occupied primary residence. That also applies for your plan unit developments, your VA approved condominium projects, your manufactured homes, which include your single, double, or multi width types of homes, and even your modular homes. So if it is maxed at a one unit and it is owner occupied, it is perfectly acceptable on the VA renovation program specifically. So, biggest thing here, allowing those borrowers to consider homes that maybe they had previously dismissed while creating more financing opportunities to build your pipeline on your end, helping those borrowers see the possibilities where others see obstacles, going back around to exactly what making lives better really represents. Now, as I mentioned earlier, the kind of main crux of all VA loans, no matter if it's renovation or not, is your certificate of eligibility, or the COE. It's going to be one of the first documents you're going to obtain on all veteran loans. What this document is going to do, it's going to verify the veteran's eligibility, their available entitlement, the funding fee status, whether or not they are exempt, if they have any existing VA loans. And a VA loan does not just apply to any housing, that applies to student loans or any type of assistance they may have received from the VA. The biggest piece here is to make sure you're reviewing those COEs as early into the process as possible, because that's going to prevent those surprises popping up later on in underwriting, and also helps you determine the best financial kind of strategy for your borrower before you get too far along down the road. Now, kind of best case scenario is your borrower getting full entitlement on that COE. And that's going to give you one of the greatest advantages on a VA loan. So there are no county loan limits when full entitlement exists. What's going to happen here is the VA is guaranteeing a portion of the loan, allowing for those qualified veterans to purchase a home with little to almost absolutely no down payment at all. Those borrowers that have full entitlement have the ability to go up to 100% LTV, so no down payment. Understanding what that entitlement they have early in the process allows you to better educate your borrowers and your partners, and of course, build confidence with everybody who's part of the process. Now, let's say a borrower has had some type of assistance from the borrower, from the VA, I should say, in the past, whether that be a student loan, whether that be a previous housing loan. They may come up that they have used entitlement. Now, don't automatically assume that borrowers who have previously used VA financing just automatically don't qualify. Many of those veterans still have remaining entitlement available and can still get a VA loan. What's going to happen is the MLB underwriter is going to calculate the numbers based on the COE to see exactly what the remaining entitlement is. What's the maximum loan eligibility for this borrower? Any required borrower investment. How much do they need to put down of their own money in order to get this financing, because the VA is not covering it 100% because they already used that entitlement previously. Always make sure you're submitting those scenarios to the MLB team rather than just making assumptions that their borrower just doesn't qualify. A lot of times we can help out those veterans where other people may think they can't. There's a lot of times where there's excellent financing opportunities available for those borrowers that have used entitlement. Now, VA does actually provide a guarantee calculator on their website. I highly recommend keeping an eye on that if you haven't used it before. It's an amazing and valuable resource that whenever you have a certificate of eligibility come back with used entitlement, you can just use this tool on the VA website to figure out exactly what that available guarantee is going to be from the VA. compare it with the new loan amount, determine whether any additional down payment is going to be needed from that borrower. Using this tool early in the process allows you to provide more clearer guidance to your borrower instead of just kind of making up a number in your head. It's just another way that we can work hand in hand with these tools that are given to us to provide a much smoother process through education and through the information that we can get directly from the agencies, VA being the question in this particular case. Now, now that we got kind of the main kind of factors that apply to every single VA program, let's dive back into the specifics that relate just to the VA renovation program. Now, focusing on some important VA renovation requirements. Some highlights here to call out. There are absolutely no minimum renovation amounts. So traditionally, like the FHA 203K, there's a $5,000 minimum that the rehab must cost in order for us to proceed. VA does not have a minimum. However, VA does have a maximum you can go to. So the maximum rehabilitation amount can go no higher than 75,000. So you cannot go higher than 75,000, and all of the renovation work must be non-structural. So keep that in mind. It has to be under 75,000 and non-structural on all VA specific renovation products. Now, MLB Wholesale does have an overlay that any repairs that exceed $50,000 must require a HUD consultant to become involved. So the higher the dollar amount, the more likely we're going to ask you to get that HUD consultant involved, no matter whether it's a FHA loan or not, just to be the eyes and ears on the scene throughout that entire project from the time through underwriting all the way through post closing. We only allow for one approved general contractor on all of our renovation products that include FHA and VA. What that means is that one general contractor must act as the main contact person we're going to work with throughout the entire process, beginning all the way to post closing end. That general contractor will be the only one we communicate. They'll be the only ones that receive the funds through the ACH transfers. They can hire as many subcontractors as they like, but we will only be paying them. They are responsible for using the funds that are dispersed to them to pay any subcontractors that they may have hired. That general contractor also must be an arm's length transaction between all parties involved with the loan. That includes both the borrower, the loan officer, and even the realtor. So the contractor cannot have any type of familial relationship between any of those parties. They can't have any business relationships between those parties. It must be completely arm's length through everyone that's involved with the loan. For VA renovation, there is a maximum of 3 draws that happen post closing to reimburse the contractor for work completed. The completion must not take any longer than 4 months. 4 months is the absolute most that VA will allow for their renovation products. There will always be a 10 to 15% contingency included into the escrow account in case any additional funds are needed post closing. If any of that money is left over post closing, it will actually be applied as a principal reduction on that borrower's mortgage. Biggest thing here is taking these bullet points and setting expectations as soon as possible with all parties involved, both the borrowers and the contractors and realtors, making sure that you can keep moving these projects through efficiently and transparently, because we don't want any of those hiccups to find out, okay, this person that's part of the process doesn't agree to how MLB Wholesale does things. If they don't agree to that, then unfortunately that just means that we're going to have to find someone else to be involved. If a contractor doesn't agree to how we have things structured, we're going to need to find a new contractor. So setting these items up front and expectations up front is going to add a smoother process to make sure everybody agrees to the terms before we get too far along down the road and have to kind of scramble to find a way to fix it and get things moving along. Now, speaking about those contractors, we're going to go through and vet these contractors and get them approved to do business with us on every single renovation loan. No matter if that contractor has worked with us in the past or not, every loan, we're going to go through that same process every single time. We're going to ask them for the list of items that are listed right here every single time. They need to provide that to our client services team. That includes their licensing, their insurance, references, their W-9, of course, a broken down by labor materials detailed contractor bid for the specific home and the project that they're working on, and any other business documentation. We're going to go ahead and review that contractor every single time a underwriting approval is issued. That initial underwriting approval, I should say. Once the initial underwriting approval is issued, our operations team will let our client services team know that a contractor needs to be approved, and then our team will reach out to the contractor directly to retrieve the items that are listed here, and call any of the references that were listed as well. Strong contractors create successful products. And that's the biggest thing, is that strong contractors who follow the guidelines of how we have it set up create those satisfied borrowers and much smoother closings. So, kind of setting once again expectations with the partners you're working with on exactly what we're going to look for on all renovation products. Here's an example of an amazing contractor bid. This is kind of a best case scenario. The contractor bid serves as the blueprint for the entire renovation product. We need to make sure that it is clearly identifying the property's information, the borrower's information, the contractor's information. We need it itemized between labor costs and material costs. We need as detailed as possible repair descriptions for each individual item that is being part of that work. And of course, prior to clear to close, we don't need it upon initial submission, but prior to clear to close, we need the contractor bid signed and dated by both the contractor and the borrowers. The more detailed your bid is, the more smoother your underwriting is going to be. Because the underwriter is going to less likely have you asking for additional revisions or additional conditions on that bid. The more detailed it is, the more it kind of looks similar to the example we're showing here on the screen, the more likely it's going to be a much smoother closing when it comes to renovation on any of our renovation products, not just VA. Make sure you're encouraging your contractors to avoid any type of vague descriptions like general repairs. Specificity reduces conditions and it speeds up us getting to the closing table. When it comes to the appraisal, VA requires all VA appraisals be ordered through their proprietary system. That is the LGY. You would order that appraisal through there. Once it has been ordered, you will get a VA case number. It's also called the LIN or the LIN. That number will stay with this property throughout the remainder of the process and post closing. You want to make sure that that appraisal is being ordered as subject to repairs. The appraiser is going to go ahead and give you a after improved value when they go ahead and review the contractor bid and review the actual property itself. The appraiser will not complete the report until they get the contractor bid in hand, so make sure you provide that when you place that VA appraisal order. Early coordination between the loan officer, the contractor, and the appraiser keeps everything moving along smoothly and make sure we have the correct information on the final appraisal report. Like I mentioned earlier, there is a $75,000 max of how much the renovation can cost on a VA renovation. Here's kind of an example of some of the eligible repairs of what people commonly use a VA renovation for. It does cover a wide variety of different types of improvements, but you want to make sure is that it has to be non-structural, it has to take less than 4 months, and it has to be less than 75,000. Examples include roofing, HVAC, plumbing, electrical, accessibility improvements, kitchens, appliances, mold remediation, decks, driveways, fencing. The biggest thing here, and the general rule of thumb, is that you want to make sure that these repairs are improving the safety, the livability, or the value while also remaining typical for those comparable homes in the neighborhood. You don't want to go completely outside of what would be normal for that neighborhood. The VA is not going to allow for that to proceed with that type of renovation work. Now, the other piece here from an eligible repair standpoint that kind of goes hand in hand what I just talked about is that the home must be habitable at the time of when you take the application. That's the biggest piece here. Is that a lot of times other renovation products, the home doesn't have to be technically habitable when you take the application, or even when we close. The renovation repair can go ahead and do that for you. But for VA, they have to be able to move in that home when you actually take your initial application. That's a VA requirement. So, other things that are not allowed under VA include anything that's considered a luxury improvement, any type of major septic installation or anything related to septic tanks, moving structures, doing any type of structural work, repairs that will take longer than 4 months. We do not allow for any type of self-help on any of our renovation programs. So we talked about that one general contractor must be arm's length. We also, even if the borrower is a licensed contractor, they cannot pick up a hammer. They cannot do any type of work related to any of the programs we offer here at MLB. No self-help at all. So knowing exactly what these limitations are up front, just make sure that you're preventing any unnecessary delays that will come up later down the road. One of the concepts that often create additional questions around VA renovation is determining what your acquisition cost is going to be. What's going to happen here is that we're going to use the lesser of either the acquisition cost plus repairs or the after improved appraised value. So acquisition cost basically is the purchase contract plus the cost of the contractor bid. So taking those two numbers together, and then we're going to also do the after improved appraised value. Of course, that we won't really know what that truly is until the appraisal is completed, but we're going to use the lesser of those numbers in order for us to proceed on all VA renovation loans. Understanding what this calculation is helps explain why some borrowers might need additional funds at the closing table, while others can actually finance the entire project through 100% financing. So there can be an adjustment when you get to the closing table, depending on where the acquisition cost really ends up of all your numbers, even on a VA loan. We do have some examples here that demonstrate how that acquisition cost calculations really works in each real situation. So I highly recommend taking a look back here at the presentation slides, walk through each of those examples slowly, and really show how the after improved value impacts the financing and why those differences between acquisition cost and appraised value can really determine what that borrower's contribution at the end of the day is really going to be. In closing, as we get ready to wrap things up, in addition to those VA guidelines, MLB does have some specific overlays that I do want to cover that apply to the situations we're talking about. Right now, for VA renovation, it is a fixed rate only for single family residences. Remember, one unit primary residence is only on VA renovation. The program is currently not available in the state of New York. We do not allow for the loan to close in a trust. You want to keep in mind those minimum and maximum rehab limits. Remember, there is absolutely no minimum, but there is that maximum of 75,000. Anything that's over 50,000 must require a HUD consultant to become involved as well. And biggest piece here is that the home must be habitable when you take the initial application, not when we close. At the time of initial application, it must be habitable in order for VA to consider a VA renovation. Knowing exactly what these overlays are help you structure those loans correctly and minimize those underwriting conditions once the loan has been officially submitted. Now, on the closing post-closing side, these are items that apply to every single renovation product we offers. Is that MLB will be the one who opens and manages the renovation escrow. Funds are only released after inspections verify completed work. So the contractor is never going to receive funds up front. So keep that in mind. The contractor must use their own money, their own line of credit in order to do the work, to start the work and do the work. They get reimbursed through the draws. We will never upfront funds to a contractor. That is one of the most biggest sticking points for a contractor where they may not agree to work with us. Make sure you describe that to them as soon as possible, and they'll let you know whether or not they agree with it. If they do not agree, we're going to need to find another contractor that does agree to the terms of how we structure things here at MLB. Um, we will always have that contingency reserve, 10% holdback on each draw, that in case we need additional funds at any point, it can be accessed. And once again, if that money is not used and we have it left over at the end of the day, once everything's 100% complete, there'll be a principal reduction on that mortgage for the borrower. All draws are done as an ACH transfer directly to the general contractor, and that general contractor is responsible for dispersing the money to any additional people they may have hired to complete the work. As we wrap things up here, learning does not stop after today's presentation. We do offer live training sessions every single day, every single week, where you can learn additional programs, ask questions, review live scenarios, and stay current on the different programs that we're constantly growing here at MLB Wholesale. The more knowledgeable you become, the more opportunities that you're going to uncover for your borrowers and for the partners that you're building relations with. Every new program, every new system that you learn creates another opportunities to make lives better. And that goes into our MLB Certainty AI pre-underwriting tool. This is an incredible new tool that we have developed internally that does a full pre underwrite on your registered loans that will be able to go through and give you a list of conditions. It will do a full, repped and warranted by Fannie Mae income calculation and a summary of all the documents that you've provided to us up to this point. It will provide you with all of the items and give you a peace of mind knowing you're structuring this loan correctly before it ever is officially submitted to a human underwriting team. If you want to learn more on this amazing new tool that is 100% completely free for all of our partners, you are required to complete one of our live training sessions. But great news, we host it every day, Monday through Friday, Monday, Wednesday, Friday at 11 o'clock Eastern, Tuesdays and Thursdays at 4 p.m. Eastern. You can use the QR code on the page here to sign up for one of those upcoming classes, or you can even reach out to either your account executive or our client services team to learn more how to sign up and about everything around MLB certainty. Thank you again so much for investing your time with us today. Biggest thing I want you to remember, VA renovation isn't just simply another loan program. It's an amazing opportunity to help out those veterans purchase a home, refinance a home that maybe things that they thought were out of reach, while at the same time improving a overall community one property at a time. At MLB Wholesale, it's exactly what making lives better really means. Creating financial solutions that positively impact borrowers, our partners, and the communities that we're continuously serving. If you have any additional questions after today, if you need assistance structuring a scenario, reviewing renovation eligibility, contractor requirements, overlays, or just a general question that you have, our MLB client services team is your primary point for contact. You can reach out to client services at mlbmortgage.com or even your assigned account executive. Our team is here to support you before that submission, throughout underwriting, and all the way through closing. Thank you again so much for being a partner with MLB. We appreciate your partnership and we look forward to helping you continue making lives better, one veteran, one family, and one home at a time.